Hello and welcome to another TLC Tutoring Company accounting video. Today we're going to be doing the journal entries for job order costing. Now, since we are using job order, what I'm going to be doing is every time that we're dealing with any type of work in process inventory or finished goods inventory, I'm going to be using the individual job indicator for each of those accounts. Your professor might not want you to do this, so please be sure to clarify with him or her. Also, keep in mind that we should have the Word or PDF version of this worksheet right here so that you can print it out and follow along if you'd like to. Just please be sure to check the description to see if those have been uploaded to the website yet. All right, so let's start with this first one. A, materials purchased on account, $12,000. So when we're purchasing materials, obviously our assets, raw materials inventory is going to be going up. So we debit raw materials inventory to increase it. And we are going to be crediting accounts payable, our liability, to show that we now owe that $12,000. Now that we have some raw materials, B is going to ask us to requisition some of those raw materials for use. Now notice that we have a portion for jobs, and then we have a portion for general factory use. This is the big difference between direct materials and indirect materials. Anything that is for a specific job that can be tied back to that job, that's a direct material. But anything that's for general factory use, that's just going to be put into factory overhead. So let's go ahead and start B. So B, we're going to start with doing our work in process inventory dash job 201. For 2,150. Our work in process inventory for job 202 is going to be for 1,700, and then our work in process inventory for job 203 for 3,140. Now remember, this is what I was saying your professor might not want you to do. Sometimes your textbook will show you to just lump it all into one individual line item, work in process inventory. That's fine as well. I'm just deciding to separate these out because a few of them are going to be completed during the period and a few of them are going to be considered sold during the period, so it's going to be easier for me later on to pick out which specific job amount had been completed. But keep in mind, these are just dashes, so really it's just one individual account that we're dealing with, which is work in process. All right, now for that $300 in raw materials for general factory use, that's going to go into our factory overhead account. And that means that the total amount that our raw materials inventory is going to be decreasing by is going to be 7,290. So as you can see now, our debits equal our credits. We're showing all of our work in process inventories for those individual job accounts increasing by the amount that we put into them. Factory overhead is going to be 300, and then we have raw materials inventory decreasing for the total amount taken out. Now for C, we have the following assembly wages were accrued. So these are very similar to what we had before in B. So let's go ahead and get started with C. So for C, we're actually going to be debiting the work in process inventory accounts and the factory overhead accounts, very similar to what we did above. So I'm actually going to cheat just a little bit, and I'm going to use that amount here. Copy and paste those accounts right here, copy and paste those over, and that way I can kind of save us a little bit of time. So it was 4,800, which was increasing work in process for 201, 5,100 for job 202, 1,600 for job 203, and then 450 for general factory use. And that means that the total amount that we used up in wages was 11,950. All right, now let's deal with this account here. Typically, your textbook is going to have a standard that it prefers. Some textbooks like cash, some textbooks like wages payable, but here I did a little keyword here, accrued. Remember, this accrued word means that we incurred the cost, but we didn't actually pay it yet. So since we didn't pay it yet, that would, for in this example, definitely be wages payable. But keep a close eye on your textbook because they do sometimes differ from textbook to textbook without even indicating what the real situation is in the transaction. But in this case, we're going to be dealing with wages payable. All right. Now, D is telling us that our factory overhead costs on account were $5,400. So whenever we actually incur some actual factory overhead costs, we're simply going to debit factory overhead and then credit however we paid for those, either accounts payable or cash. In this case, it was on accounts, so we're going to be using that accounts payable account. So factory overhead for $5,400 and then accounts payable for $5,400. All right. E, our next one is actually also a factory overhead cost, but it's special because it is depreciation. So it's not going to be cash or accounts payable. It's actually going to be that accumulated depreciation account that you learned back in financial accounting. However, in this case, we're not going to put it in depreciation expense because we want it to go into the cost of the good eventually. So we're going to be putting it into the factory overhead account. And be careful here because your professor might want you to use a dash factory equipment or something along those lines. So our next one is F. F says that factory overhead is applied at a rate of 75% of direct labor cost. So let's start with the actual accounts, then we'll get into what that 75% really means. And when we're applying factory overhead, what we're doing is we are removing some amounts from the factory overhead account, and we're putting it into work in process. We're actually applying it to the work in process inventory account now. So in order to make work in process inventory go up, we will debit it. And I'm actually going to be debiting it for the 3 individual jobs, because again, it's going to help me track it a lot easier later on. Just time consuming. All right. And then we're going to credit factory overhead. So that is your apply factory overhead entry. Debit work in process inventory to make work in process go up because you're finally applying factory overhead to it, along with the direct materials and the direct labor that you had put in there earlier. And then go ahead and credit your factory overhead account. So that kind of begs us to kind of pause here real quick. Make sure you're comparing these entries. D and E, compare with F. With actual factory overhead costs, debit the factory overhead account. When you're applying factory overhead costs, credit that account. All right, so now let's deal with that 75% of direct labor cost. You're probably going to have to deal with some type of predetermined overhead rate at some point in your cost or your managerial accounting course. So what you're going to notice here is they already found the rate for you. And your rate, when you apply it, is going to be 75% of whatever the direct labor cost was. So let's start with job 201. For job 201, our direct labor, which comes from C, our direct labor that we applied to job 201 was $4,800. So we're actually going to be taking that $4,800, and they're telling us that the factory overhead that we should apply is 75% of that direct labor cost. So we're actually going to be applying $3,600 to job 201. We're going to be doing the same thing to job 202. If we look at C, we had $5,100 in direct labor cost, and we're going to be taking 75% of that for applying overhead. Same thing for 203. We had $1,600, and we're going to be taking 75% of that, so we're going to be applying $1,200. And that means that we simply have to plug and that will give us $8,625 for our credit amount. Now, in this case, we are also going to be completing some jobs. So notice that we completed jobs 201 and 202 during the period. That means that they're no longer work in process. So we need to transfer them out of work in process inventory and transfer them into finished goods inventory. So remember, all of your inventory accounts are assets. So if we need to make finished goods inventory increase and work in process inventory decrease, that means that we're going to have to debit finished goods inventory. And again, I'm going to be doing it for the individual jobs. And then we're going to be taking it out of their work in process. Now, the amount that we take out depends on the direct materials, direct labor, and factory overhead that were applied to these individual jobs. And this is why I like to break it out personally. So when we're dealing with work in process, I'm actually going to do it from the credit side, and we'll plug the debit because that's technically where these numbers are coming from. When we look at our work in process inventory for job 201, I'm going to use a formula because it'll help us keep things clean. I'm going to start by going up to B. Notice in B, this is where we first dealt with the work in process inventory account for job 201. We added $2,150 to that account. So I'm going to grab that for our formula. That's our direct materials. And on my keyboard, you might not be able to see this, but I'm going to put a plus sign. So now I have equals that cell plus. Now I want to grab our direct labor for job 201. So our direct labor was in C. So I'm going to grab this direct labor of $4,800 from C. And again, you can't see me doing this, so I'm going to put another plus sign. I'm adding another piece. And our final component, not that one. Our final component is going to be factory overhead. So we applied factory overhead in F. So here we are with our work in process inventory, job 201, with our factory overhead, and I'll click that last piece. So if we go down, you might not be able to see the numbers, but what it was our direct materials, our direct labor, and our factory overhead that we applied to work in process dash job 201 above. I'm going to click enter, and that ends up being $10,550. We're going to be doing the same thing for job 202, but instead of me using cell referencing where you can't really see the numbers, let's pick it out from the actual information that is above here. So for job 202, our direct materials were $1,700. Our direct labor was $5,100. And last but not least, our factory overhead was 75% of direct labor cost. And I actually have that right up here in F, $3,825. So that means the amount that was our manufacturing cost for job 202 ended up being $10,625. So that means that those amounts are simply going to be plugged into the finished goods inventory for those individual jobs. And that's it for G. We're simply moving those sums away from our work in process inventory into finished goods because now they were completed in G. Now the last one we want to do today is H. Now H, all we have is job 201. So this one should be easy. We simply have to record that we received cash of $15,000 for this sale. And then we have to record the cost of the goods that were sold and that these goods are coming out of our finished goods inventory for job 201. And for job 201, the total cost of those goods were $10,550. All right. So that's it for job order entries. Keep practicing this technique. It really isn't that bad, and it does kind of relate back to a lot of the things that you learned back in financial accounting. We're just adding some managerial and cost aspects to it. So please be sure to leave a comment below if you would like to add to the conversation. Make sure that you subscribe and you check out our website as we start to upload some additional resources. And until next time, happy studying. Thank you for watching.